tried and true. Okay, almost risk-free. Nothing's risk-free.
That's awesome. Go ahead, TJ.
So anyways, Vinny, can we cut to the slides here? So the very first slide here, talking about investment basics. I'm going to dwell on this a little bit. I'm going to go through this in fairly lengthy detail. I want really everybody to really get a grasp on this and understand it. Okay, there's many alternatives, right, when it comes to investment. And real estate is just one of them. Okay, and obviously the next one that pops up is the real estate the stock market, and people like to invest in stocks, and that's very popular. So on this chart here, I'm going to do a quick comparison between the stock market and investing in real estate. Okay, just to kind of drive the point home why I believe investing in real estate is head and shoulders above the stock market. Assuming, you're astute, you're active, you want to participate. Okay, if you just want to completely passive investment, throw your money over the fence, okay, maybe at that point it doesn't really matter. You can get into the stock market, try to get one of the high-end stocks, Apple, Nvidia, Tesla, whatever, but as you know, everything goes up and down, right? What goes up must come down, right? That's just a general rule here. So anyway, so let's get back to the chart here. Here I compiled some information by Investopedia. So everything that I talk about here, I give all the references, I give all the websites. This is all available in the public domain. When we get to the very end, my pearls of wisdom on, what I did to be successful in real estate, I want to transfer that information and that knowledge base to the audience here. So you can go ahead and follow that, okay, and you're guaranteed success, all right? So why invest in real estate? Okay, real estate is really an asset class of its own, okay? It's not Bitcoin, it's not digital, okay? It's not paper, okay? Real estate, okay? The word real is the key word there, okay? Real estate is a real, tangible asset, okay? It's something you can go and work on and look at, okay, versus a piece of paper or some electronic currency or something, right? So real estate, should be part, of a well-diversified portfolio. You can invest in, many different avenues, right? But, real estate should definitely be one of them, okay? And here I'm going to talk about the four basic investment principles, okay? Number one, okay, home ownership, okay? This is the most simple, straightforward, and probably 90% of real estate investment is for your own self-use, okay, self-utilization. Okay, home ownership, that's your home sweet home, okay? That's, roof over your head for you and your family. You can live there short-term, long-term, as long as you want, right? Your home is your comfort zone, so to speak. Right? So, yeah, everybody should get their own home. Okay, right. In my mind, if you're going to settle down and stay in anywhere for any 5 years plus, home ownership is the way to go versus renting. But the way things appreciate so fast here in the Bay Area, maybe even 2-3 years of home ownership is better than renting, just because we'll show the appreciation curves here for the San Jose area, and you'll see in the San Jose area in the last 10 years homes have doubled. Okay, so that's just incredible. So anyway, so the home ownership, so not only do you get the comfort zone, the comfort of having your own home, but time is on your side, okay? Appreciation. Okay, you don't have to do anything. And as the clock ticks, your home appreciates. And as I just mentioned, in the San Jose area, it's been documented that in the last 10 years, the value of homes doubled. Okay, that's appreciation. Right? That's the luxury of owning a home in a high appreciation market like we have here in the Bay Area. Okay, the rest of the country isn't necessarily like that. Okay,
that's right.
But we're in a very unique area here,
San Jose.
And you should
Bay Area.
Right, and you should take advantage of that.
Of course.
Okay,
yes.
We're in a very unique area.
Yes.
Situation here. I almost call it we have our own little real estate bubble or economic bubble, whatever you want to call it. I'm not going to talk about that today, but yes, we're in a very unique area. Okay, so you can really get good appreciation for your home here. Okay,
Right,
and then there's another concept here called leverage. Leverage is basically using somebody else's money to invest. Okay, and when you buy a home, almost nobody puts all cash down. Okay, in the Bay Area, yes. Okay, we're seeing a lot of cash deals, but typically people are looking for the lowest down payment. First-time home buyers, 0%. I think FHA is 3% down.
3.5% down payment.
3.5%. VA, 5%.
VA 0% down payment.
Right.
And then FHA 3.5% down payment. So what DJ just shared is leverage, meaning we use the lender money to create wealth for ourselves by the home value appreciate over 10 years. It double up the value of the home. That's amazing, right? It's amazing.
Right. So this has been going on for centuries, right? Leverage is really the key, and this is why you want to invest in real estate, because you can leverage your property. Okay.
Like you can,
well, I think they're seeing the slides here, right?
Yeah. The graph. I mean, showing the home price the last 60 years. If you see that graph, the home price in the U.S. the last 60 years, you will see how much home price increase. So it's really amazing when we talk about appreciation, and that's the whole point of owning a home is looking forward to the future value of the property. And that's what TJ just shared with you. So owning your own home, living in there, and 10 years later, your home value go double. Yes. Right? That's awesome.
This is your best investment.
Okay?
Get on the train, okay? Get on board, okay? If you haven't invested into your home yet, talk to MC. Figure out how to work out the finances. There are programs out there that don't require the standard 20% down, Fannie Mae, Freddie Mac, conventional government-backed loans, okay? Yeah, 20% down might be a little rough in the Bay Area, but there are other loan programs out there, and that's what we call leverage.
Right.
Use somebody else's money to buy your home.
So just to continue what TJ just shared with you, I'm a loan agent and loan manager at Pacific Y. So if you ever thinking of buying a home and not sure if you qualify for a mortgage and what kind of loan program out there that best fit for you and your family, contact me, because I am in this career for over 20 years and I know exactly what best for your family, so that you can just come here, call us, make an appointment. We'll be really happy to help you to go over your own scenario, and we will suggest the best loan program for you. And by the way, we have a low down payment, or we have a no doc loans. And if you are a business owner, you normally fight tax like negative income or very little income. It's okay. We have a lot of loan programs for business owners. So.
Right. So as I said, get on board, get on the train. If you're tired of paying rent and throwing buckets of money away, give MC a call and see what kind of package she can structure, for the deal.
Yes.
And we do work in a real estate office here, so there's plenty of agents and there's plenty of help to help you with your search and something that fits your budget. Okay.
Yes.
So, we talked a little bit about appreciation, doubles here in the Bay Area, like every 10 years. We talked about leverage, using somebody else's money. Well, it's not only leverage up front. This is something that I like about leverage. I kind of come up with my own term here now. It's kind of like double leverage, because you can leverage the bank's money to buy your home, but 10 years later, when you have all this equity in your home because your home doubled in price, now you got equity, And once again, you can use the bank to tap into that equity. So you can leverage on the front end and you can leverage on the back end. So now we're double leveraging. You can't do this in any other type of investment. I mean, this is just fantastic. The way the banks and the real estate laws and are set up, that allows you to do this leverage and take out your equity.
Let me expand it a little bit. When DJ say you can leverage front end and back end, meaning when you just buy your home, you borrow money, you put out like 10% or 20% down payment, so you leverage lender income to create your home value appreciation, and then now 10 years later or 5 years later, you have so much money in the home, So you have equity there. Now is the back end leverage is you're gonna borrow a cash out or HELOC line, whatever it is, and you use this money to buy another home, right?
Exactly.
Invest in another property. Then you create another home value appreciation in another property using lender money again. That's what he means by you can leverage front end and back end that no one else can do that in different investment types.
Strategies, that's right.
Yeah.
That's right. So now you can expand your real estate portfolio. So what we say here is get your foot in the door, okay? And the only right time is right now, okay? People ask, well, when should I invest? Well,
no, people, a lot of people, they ask, when is the best time? And normally, actually, the best time is 10 years ago.
yeah, right. So meaning like get on board, okay?
Right. Anytime is the best time.
That's right.
As long as you
right now is the best time.
Yeah, as long as you are qualified for a mortgage or you are ready to purchase, you have a down payment, whatever. That if you are ready to buy, that if somebody qualified for a mortgage, have a down payment, that's the best time. I mean, what else do you ask for? That's the best time.
That's right.
To jump in.
That's right. And figure out how to get that down payment. You know, friends, family,
whatever. Right.
Talk to MC. You know,
exactly.
the good loan programs out there. Okay. I know we're going slow on this, but we really want to drive this home. So excuse me if we kind of walk through this baby step through it very slowly. So now we're still on bullet one, okay, home ownership, because we're not done yet. There's other advantages, right?
The next point that he's gonna tackle will be even better, even amazing. It's even
right.
Unbelievable,
so,
right?
Based on other investments, you don't get the tax advantages that you get with real estate. Real estate has lots and lots of write-offs, okay? And I think I discovered the secret, you know, on how the rich keep getting richer and don't pay taxes. Okay, I'm gonna share that in our next series, you know, on tax benefits. But let me say, real estate is, you know, the only investment where you get these tax advantages, okay?
That's right.
I mean, typically you can write off all of your mortgage interest, okay, on your Schedule A, your itemized deductions. Typically you can write off all your property taxes, okay? That's considered another tax that you can write off, okay? Fortunately, there's been some limitations put on home ownership tax benefits and tax write-offs, okay? In the rental property world, okay, there still are no limits, okay, on your tax benefits, okay? And I'll talk more about that. If you're an active real estate investor, there are absolutely no limits on your tax write-offs.
That's right.
So, you know, set off a light bulb there, okay? I'll repeat that. If you're an active real estate investor professional, there are no limits on the tax write-offs, okay? No place else are you going to find that, okay?
That's right.
So please, you know, come and talk to us. We want to help you, okay? And then obviously when you sell the property, okay, typically again there's tax consequences when you sell, okay? In the rest, there's something called capital gains exclusion, okay, which is applicable across probably 90% of the United States, but it's hard to get 100% of your capital gains excluded on the East Coast and West Coast, okay, because we have such high appreciation here, okay? If you're single, it's $250,000 capital gain exclusion. If your property appreciates $250,000, you netted $250,000 when you sell it, okay, you can pull the capital gains exclusion and not pay any taxes, okay? If you're married, it goes up to $500,000, okay? You can write off capital gains exclusions. In the Bay Area here, you can easily net, you know, $250,000, $500,000 or more if you hold on to your property for, you know, 10 years, whatever. Like I said, $1 million home will double. It'll be $2 million. You net $1 million, okay? You're going to have to pay taxes, okay?
Yeah, so I just want to expand this a little bit. So if you currently own a home, okay, let me go back. Why, on average, every 7 years, people sell their home? The reason people sell their home is because they want to take advantage of the capital gain tax exemption. And that's what I see so many of my clients are doing that. So for example, they bought a home in 2020 for $1 million. And today they can sell that home for $1.5 million. They go ahead and sell it right away. Why? Because the 500,000 capital gain, they can completely waive on the tax, capital gain tax.
That's right.
Because we have, if it's a couple, husband and wife own that property, each of them have $250,000 tax exemption on capital gain. So that's how they sell. That's why they sell their home, because they take advantage of that 500,000 capital gain tax exemption. Imagine if you are doing that in your life for 3 times. So you make $1.5 million without paying any capital gain tax. That's beautiful money, right?
Incredible. I mean, once again,
Yeah.
only in real estate can we do that.
Yes,
Can we
exactly.
pull the money out of our investment, basically, that happened just over time through appreciation, where we don't have to do nothing, but
Exactly.
just watch the clock tick, right?
And then let it happen. Yeah.
And let
It's
it
amazing.
appreciate, get your 500, $500,000 appreciation in it, sell it, don't pay taxes, move on, do it again.
Yeah, that's awesome.
I mean,
yes.
I like that strategy, MC. I mean,
Yes.
you do that 3 times, you just banked $1.5 million and didn't pay taxes.
For young people, they
Okay.
can do it for even 4 times. And it's easy to do that in the Bay Area. It's very easy. Yeah.
Right, because of the high appreciation. So, like I said, in investment property, they don't have that capital gains exclusion, but there's other tricks that you can do to not pay taxes.
Right,
okay,
right.
And to upgrade. So a lot of times when people do sell their home, their primary home, they use it to upgrade and trade up. And that'll be kind of one of the tried and true investment strategies that we'll talk about. That's called kind of climbing the housing ladder. I'm sure you've heard of climbing the corporate ladder. Well, you can do the same thing in real estate and climbing the housing ladder. Once you get that appreciation and that equity and you sell, you can keep trading up.
Right, right.
Okay.
It's amazing when we talk about the capital tax gain exemption. And remember, the minimum requirement, you have to live in that property for 2 years. And you can do this again and again and again as many times as you want. There's no limit, there's no cap, or you can only go up to $2 million. No. As long as you gain 500,000 as a couple, you can sell the home and you can do it again and again and again.
Right.
That's it. That's
Right.
very easy.
Right. It's not a once in a lifetime
No.
tax
Right.
capital gains exclusion. Like she said, every 2 years you can do this if you're living in the home. So I mean, that's just phenomenal, incredible. Take advantage of these tax laws. That's why my next course I want to talk about tax benefits. It's so important.
Awesome.
Okay, moving on. Number 2 here, being a landlord of rental property. Okay, not everybody has the stomach for it. Not everybody wants to be a landlord. But if you have that mentality, and you don't mind buying investment property and dealing with tenants, okay, it's a perfectly good way, to make an investment and get a major return on investment. Okay, why would we do that? Okay, number 1 is cash flow. Okay, rent, right? You're collecting rents on all your properties, on all your doors. Okay, you have immediate cash flow, right? Then the major tax advantages. There's limits on primary home tax benefits, but there are no limits on investment properties. So you have major tax benefits. Okay, and one that doesn't show up when you have your primary residence is called depreciation. You can take your property and depreciate it over 27 and a half years, and you can slowly write off, okay, against your income. You can write that off, offset your income, so you can end up having a net zero situation where you have all this cash flow, okay, but depreciation allows you to write it off. Major tax advantages, okay, as well as all your expenses can be written off. Not with your primary home. You can't, utilities, insurance, repairs, you can't write all that stuff off. But when you have an investment property, everything's gain.
Let me repeat what TJ just said, because it's very important.
Yeah.
So when you own your home, you live in it, you cannot write off tax on prepare. Like when you fix your home and stuff like that.
Right.
But if you own it, you cannot claim that. But if you rent, you own an investment property, which you rent it out every month, you collect rental income, you can claim any kind of money that you put in that house. If you fix the property, you pay for the insurance, you pay for the mortgage, you pay for the property tax, anything, you can claim on that investment property. So that's why DJ keeps saying that major tax advantage. That means you can claim anything.
Basically almost unlimited write-offs, okay? But, you know, obviously there's caveats. You need to get into the tax code. We'll talk about that. Like I said, that'll be our next series downstream here. But there are tax differences, tax benefit differences and consequences between a primary home and investment property, getting a multifamily, or just basically taking your primary home and renting it out. It becomes a rental, okay?
Right,
Then
right.
you trade up or whatever, move on to your next home, right? All of a sudden you can start taking advantage of those tax codes, okay? And something interesting with investment property that they don't let you do with your primary home is when you sell it, they call it a 1031 exchange, where you don't pay any taxes. There is no, you know, net tax on the proceeds from the sale. All of it is just traded up. They call it a 1031 exchange, okay? It's a tax-free exchange, but tax-free, not necessarily. Let's call it a tax deferred, because sooner or later down the road, you can do 1031 exchanges all you want, as many as you want, but sooner or later when you finally sell that property, okay, they're going to tax you, and they're going to go all the way back. If it's 10 years, 20 years, 30 years, they're going to go back and hit you up, okay, with the profit that you made, capital gains that you made on those properties.
So 1031 exchange is an amazing tax law that I want everybody to master this, because it's going to benefit you, your family, for the long run. As DJ mentioned, 1031 exchange only works for the investment property. It doesn't work for your homeowner property, and you can delay your tax. Look, every time you sell an investment property, normally, if you don't use the 1031 exchange, the escrow company will keep the money,
portion for tax, yeah.
A portion of it. I think it's 30% of your capital gain
a lot
tax.
of it, yeah. They keep a lot.
They keep it right there at closing, because they don't want you to spend all your money at the end of the year. When you pay tax, you don't have money to pay tax. So they keep it there to pay tax for you. And most of the time, they keep maybe the same amount or more, not going to be less, right?
Right.
So that's a lot of money holding back.
That's right.
So that's why we have this 1031 exchange law. This law is to allow the investor, you, to continue investing in real estate without paying tax right now. Nobody's going to hold up your money. But instead, all the money that you just made, the profit you just gained from the sale, you put it in the next property. Of course, there's rules and guidelines in the 1031 exchange. You have 45 days to determine or to be in contract for the next property. You see that? So you have only a month and a half to define which property you want. So don't worry about that part. If you come to Pacific Y, we help you. We know exactly what we need to do for you to make sure you meet the time frame. So we're going to help you to take care of everything to make sure all of your money that you gain will go to the next property that you want to invest in, okay? And we'll take care of everything. And 1031 exchange, the good thing about it is you can defer again and again and again. You don't have to, like, you sell, for example, you sell the condo, you make a lot of money. Now your next exchange is a house, right? And then when you buy a house, years later, you sell the house, you make a lot of money. Now you exchange for a duplex, right? And then you defer again. So then years later, you sell your duplex and you buy a fourplex, right? You keep deferring and deferring until, listen, you die. And all that property go into a trust, going to your son, your daughters.
That's right.
The moment you die, all that deferred tax go away. It die with you. Your son and your daughter get all the property for themselves without paying a penny for the capital gain tax. So see how beautiful it is? So you can defer until you die, and then nobody had to pay that tax. Your children are going to gain all that money, all that properties for them. So 1031 exchange is the beautiful law that you want to understand. You want to use it for every investment property that you have out there. If you have any question, you can always contact us. We're going to go detail with you case by case.
Right. That's beautiful, MC.
Yeah.
I mean, once again, only in real estate, okay? So, you can't do this with any other type of investment strategy, okay? So, if that's not enough motivation, to get you into real estate, talk to us, okay? So anyways, we talked about, primary home ownership. That's probably like 80-90% of real estate transactions. We talked about, getting into investment property, being a landlord. That's probably another 10-15% of real estate transactions. And there's a few that are kind of smaller, down in the 1, 2, 3%. Item number 3 here is basically flipping homes. Some people actually make a business out of it. I mean, they look for undervalued, distressed properties that they can find, and they can quickly fix them up and resell them for a quick turnover and a quick profit, okay? It's more of a business model, but it is investing in real estate, very short term, quick turnaround, quick turnover, okay? I myself personally have only done it once. And I think home ownership and being a landlord is probably a little more easier and straightforward than having to get into a home and completely remodeling and fixing a home and trying to sell it real quick, because the appreciation here is so phenomenal in the Bay Area that you don't have to do anything for your property's value to go up. Doesn't even matter if it's a doghouse, okay? You're going to get multiple bids, and they're going to be over the asking price. I mean, that's how ridiculous the real estate market here is, right? So there's almost no incentive to go in there and buy undervalued, distressed homes and put all your resources and assets into it to fix it up and try to flip it, Unless you buy it for $1 million and you're going to sell it for $2 million, 6 months later or a year later, I got it.
Let me share with the audience a few examples of flippers who make a lot of money, because I've been working with a lot of clients who, some people, they flip in a short term, like they buy a properties, they fix it up and they sell it like after a few months. That one, you don't make a lot of money, but you turn around, it's really quick. You make a 10% profit, because you have to pay a lot of tax, because anything that you own less than 12 months, you pay more tax. But anything you own more than 2 years or more than 12 months, you pay less tax.
Right, long-term capital gains.
Yeah, so long-term capital gain. So, but I have a couple of, like 3 different group of, actually 3 couples of husband and wife. What did they do? They buy a property, really bad one. They fix it up. They live in it for 2 years and they sell it. You know why? Because they want to take the advantage of the $500,000 capital gain tax exemption.
Right.
You see how smart? They wait for 2 years.
Yeah.
They live in it. They live in a brand new home because they bought a very fix up a home, right? The home that really bad. They fix it up really nicely. They live in it for 2 years, and they make $300,000, $400,000, $500,000, depend on the market. They sell it. They don't have to pay anything. They take advantage of the $500,000 capital gain tax for a couple. They move on to the next one.
Right.
And in some cases, after a year or 6 months, they don't have enough money because they put all the money into the investment. They call me to refinance, cash out. I cash out for them, get some equity out for them to whatever they need, and then 2 years they sell it. So this is how a lot of young people now they're doing that. Why young people? I'm talking about young because young people they have no fear. They take more risk. That's what I see.
Right.
They do that a lot now.
Right,
but I have 3 couples that keep going back to me doing loan, like refinance, cash out, and then also more money, more loan for different properties. So that's what they do to take advantage of this.
Right. And so, flipping is kind of considered a short-term thing. What you explained was kind of more of a buy and hold for 2 years versus short-term flipping.
I see.
But that strategy is perfect. So like I said, there's 100 strategies under the sun here for real estate investment, and we certainly can't get our arms around all of them in this short little webcast. But we're going to talk about the basics, and we certainly want to stimulate, your thoughts and some conversation.
That's right.
So you can kind of see the different approaches and see what resonates with you. Now, obviously, if you're a do-it-yourselfer, a great handyman, or even a general contractor, it's usually the general contractors that just go out and flip homes because they're looking to, buy and develop and fix something and sell it. Okay, that's kind of a general contractor mentality. But like I said, if you're a do-it-yourselfer, very handy, flipping is reasonable. And if you're willing to take the time, take 2 years, and you don't mind the dust while you're living there, it's been known to precipitate some rough patches in relationships. Right. So be aware of that. Nobody wants to be remodeling their home for a year or two and living there. Mm-hmm. So you got to consider those things too. But flipping, yes, you can make some money doing it, but it's typically because you invested your time and your energy to fix up the home. You just turned the doghouse into a Taj Mahal. Okay.
That's right.
But you're not getting the advantages, the tax advantages of holding on to your property for at least, like you said, over a year or 2 years to qualify for the capital gains exclusion. You're not doing a 1031 exchange, so taxes.
Right.
When you're flipping homes short term, taxes are going to kill you.
So because DJ just remind me something about if you are a general constructor and you see this is amazing, but you see that you cannot do it by yourself because in terms of capitals, you don't have money for all that, buying a home, or you don't have money to do whatever you need to do in this kind of process, you can contact us Pacific Y. We love to work with you. If you are a general constructor and you want to do this type of thing, you're going to work with somebody that can help you along the way. We're going to work with you. Like you just be part of it. We're going to do it together. We're going to flip home together. We're going to build home together. We're going to sell home together. You want to work with us? You can contact me or TJ or anyone in the Pacific Y. We're going to work with you too.
Right. And if it's something you're interested in getting into, I mean, there are construction loans, there's takeout loans. These are considered short temporary loans if you want to, do that type of rapid development.
Right.
Okay. And not only for flipping, but, back to what we talked about last year, accessory dwelling units.
Right.
There's no, if you got some equity in your property, there's no reason why you can't just pull some of that equity out and go ahead and build a beautiful 1,000 square foot, or 1,200 square foot, 3-bedroom, 2-bath in the backyard. Okay. I mean, there's those loans are available, construction and takeout loans, short-term loans, maybe up to 2 years or whatever like that, So yes, give MC a call here. Another thing I didn't talk about, but I will throw in there real quick, is more like short-term rentals. Airbnb has become very popular. That again is more of a business model where you're doing short-term rentals, meaning less than 30 days. Okay, anything more than that is considered long-term rental. Okay, some people like that. Some people want to deal with the public on a daily basis and having people coming in and out. Okay, that's not my cup of tea. It's not for everybody. But there is a business model there that has been fairly successful. I mean, look at Airbnb; it has become very successful, and they're all over. Now, especially if you can find something in a very attractive tourist type of area or something where there's a large influx of tourists, looking for places to stay, and hotels are always booked. Well, you got a great business model that you're always going to stay rented out, and typically the short-term rentals rent for more, maybe even twice as much as a long-term rental. Right. So there's a play there. I think I have a chart downstream a little bit to talk about that, but I want to just throw it out there since we're talking about all the other options. Number 4 here, real estate investment trust. This is kind of more for passive investors where you kind of want to just throw it into almost like a mutual fund stock market. There's real estate trust, there's groups, there's partnerships, there's LLCs. It's kind of, mutual funds that allow you to put your money into investments or funds that are strictly investing into real estate, okay? So this way you're indirectly a real estate investor because those funds are being used to develop and manage real estate, okay? And you do get the dividends and returns on that, like almost like stock, okay? But if you want to be, completely hands-off, where you don't have to directly own, operate, or finance the properties, let somebody else do it, go ahead. That's a completely 100% passive investment strategy, is to go into these type of real estate investment trusts. Okay. The ones that I'm most familiar with are 1 and 2, primary home ownership, being a landlord. Okay, like I said, I only flipped once. I've never gotten involved with any short-term rentals, Airbnb, stuff like that. And I've never gotten involved with any real estate trusts or investments, okay? So that's where my expertise lies, if anyone wanted to talk to me about that.
Yeah, I think the Airbnb is really a good option.
Right.
Because we've been doing Airbnb for a few years, and it's so much cash flow. It's a lot of cash flow. If somebody wants a lot of cash flow, Airbnb is your way. And again, DJ mentioned option 1, homeowner living in it and take advantage of the $250,000 capital gain tax exemption for individual and $500,000 capital gain tax exemption for a couple. And that's the number one, way of investing in real estate, making so much money and don't have to pay a lot of tax. And the landlord investment property, the second option, taking advantage of the 1031 exchange. Those are the key.
Yeah,
the
great.
key in real estate investment.
Yes.
And we hope that you learned something today, or we remind you something today would benefit you in many ways and your family. We appreciate that you watching this video today, and we hope that you enjoy it. And if you like it so much, you are welcome to share this video and comment. If you have any question, go ahead, ask us. We'll be here to answer your question. And TJ will come back next week. Is it correct?
Yep.
Yeah, TJ gonna come back next week to share with you more amazing real estate investment information. Right, TJ?
Yeah. This is just packed. It's just loaded with information here. So please bear with us. I mean, we're going to disseminate that information. We really want to help you on your investment, real estate investment, journey. We want you to be prosperous. We want to show you some of the tips and tricks how to do that. So please, reach out to the office here.
Right.
And we'll be back next week.
By the way, if you need to apply for a mortgage or get a pre-approval for your loan, you can go to pacificymortgage.com, or you can contact me directly for pre-approval, or you have any question regarding to money, loans, and stuff. I'm here to help you. So you can always call me, contact me, and you can always go to pacificy.com to find one of our agents and brokers. If you want to work with one of us, we love to help you. We're here to serve our community, and that's why we create this program, the Voice of Pacific Y, to give you information, just to make sure you have all the knowledge to serve your family, yourself, to become wealthy, because of all this knowledge is really, really important. If you don't have this knowledge, guess how much money you lose, right? 500,000 capital gain tax exemption, 1031 exchange. If you don't have any of that knowledge, I think it would be something really sad.
Right.
So thank you so much, TJ, for sharing all this amazing information. And we love
welcome.
to take
You're
care
welcome.
of our community, especially whoever watching our show. We appreciate you so much. And do call one of us if you have any question. Right, TJ?
Right. Yeah, thank you, everybody. We look forward to seeing you again next week. We got a lot of good information here.
And if you want to know more about ADU, go back to our previous video. TJ talked about ADU A to Z, for every single thing that you need to know about ADU.
Right,
So,
accessory dwelling units. We'll actually talk about it here downstream here. Also in this, I do talk about maxing out your property, and the simple and easiest way to do that is by building it out, basically. And the new ADU laws, guidelines allow up to like three additional units on your property. So anybody can turn their single family home into a fourplex now.
yeah.
Okay. I mean, only in California. Okay.
Exactly. Thank you so much, TJ.
All right. You're welcome, MC. Thank you. All
Thank
right.
you.
Bye-bye,
Bye-bye.
everybody.